Good afternoon, everyone. Thank you for joining us. It's 4:30 p.m. on a beautiful Monday. But boy, was the weather stunning this past weekend. Nice and cool and bright and sunny. We needed a gorgeous day like we had on Saturday and Sunday. So I appreciate you joining us. My name is Veronica Birch Flores, and I have the pleasure and honor to serve as the Chief Operating Officer for First National Bank of South Miami. And we are very proud to bring you timely information on the Paycheck Protection Program. And this is the second draw program, although we will also be discussing the Paycheck Protection Program, the first round, as well as forgiveness today. So I think you'll find today filled with very useful information. As usual, we do ask that if you have any questions that you post those on the Q&A section. So the Q&A will allow you to post any questions that you have at the end of the webinar. Angel will be happy to address those questions. But Angel's going to cover lots of important information. Also joining us today is Patrick Corey. Patrick is our senior commercial real estate lender for the bank, and he is the liaison for all of our lenders. Although a bank only has 8 commercial lenders, during the Paycheck Protection Program in April and May and June, we had redeployed many of our important assets, our different officers, and we had 18 officers working in this because the need was so dire and so critical. And those 18 officers are going to help us with this second draw program as well. So if you already had an officer, as we called them, first responders, and we called them the first responders because they really were giving a lifeline, throwing a lifeline to your businesses to help you to stay alive. So while I was waiting for this, our music was playing Bee Gees, Staying Alive. So I thought, oh, I should be playing that while you all were waiting for the webinar to start, because that's what this PPP program is all about, is helping businesses to stay alive. When the PPP was introduced, signed at the end of March and introduced, it was when we all believed that we would be through the worst of this in 6 or 8 or 10 weeks. And here we are 10 months later and still suffering greatly. Some businesses and industries have been especially hit. Some have actually done better through the pandemic because they might have been able to pivot, or they're in a line of business that was needed. Think of delivery services and some other types of businesses that actually have done well. But for the most part, small businesses were devastated by the pandemic and still are. So we are here to help, and we are a proud community bank, and we're proud to be there for our clients. And our clients come first at First National. So we're proud to bring you this information and get you the loans that you need and work with you so that you'll be able to earn full forgiveness for those loans. But with that, again, any questions that you have, please post them in the Q&A. And with that, I am going to turn it over. We have our subject matter expert, Angel Medina. Of course, many of you have spoken with Angel since March, since all of this started, and lots of emails exchanged with Angel. So since the middle of December, he started reading through the act and what was to become law. And he has, again, worked day and night, weekends included, to become expert and provide some timely information for all of you. Tomorrow, this recorded webinar will be available online. We are not distributing the slides, but of course, the recorded webinar does go through the slides, so you will be able to see the slides, but the slide deck itself will not be distributed. But we're so proud to have Angel on our team, and thankful that he has really taken this to heart, understanding how important this program is. In the first round, we provided $80 million in loans, which helped over 500 small businesses in our community. And that translated to over 8,000 employees who potentially were staying employed because of our efforts. And our bankers were very enthused by that and worked late into the night and on weekends and through the holidays of Easter and Passover to bring this program to our clients. So we hope the second round won't be quite as dramatic and quite as difficult, but our bankers do stand ready to help you. Without further ado, I bring to you my buddy, my pal, our expert, Angel Medina, Director of Private Client Services. Angel.
Thank you, Veronica. Thank you all for joining us today. Since March of 2020, we've been working quite diligently on making sure that what resources our government is providing to our neighbors, our business owners, our community. We make ourselves as aware of their process as possible so that we can help you and your employees through these very challenging times. And as you've experienced, many of these things have changed with less than a day's notice. And so we continue to provide you with the most current information that is available to us, and in as easy a manner as we can find to convey to you what opportunities may exist for you, your employees, and your businesses to get through these next few months. So let's begin with an understanding of the new second draw. It is still the Paycheck Protection Program, and it's called the second draw because I want you to be aware that there really is only one Paycheck Protection Program, and we're calling we're not, the SBA is calling the first monies the first draw and the second monies the second draw. And that's an important thing to understand, because in the act itself, the economic aid to hard-hit small businesses, nonprofits, and venues act, it covers things that affect both the initial Paycheck Protection Program loan and this one, the Paycheck Protection Program second draw. As you know, the president signed this into law December 27th, and the SBA issued their first interim final rule on the matter on January 6th. And summarily, what it does is, number one, it restarts the original Paycheck Protection Program, which right now stands at over $800 billion in monies that the Congress has allocated towards this employee protection, small business recovery program. It provides greater flexibility in how the PPP loan funds can be used for both the PPP loan and the PPP second draw. It expands the allowable and forgivable eligible expenses, and it provides a simplified forgiveness for loans under $150,000. You may remember we've talked quite a bit about blanket forgiveness, and I'll get into it in a minute, but this is, in my mind, as close to blanket forgiveness as you can expect a government to provide. So what was the Economic Aid Act? It appropriated $325 billion towards this initiative, $285 billion of which is for the PPP second draw and PPP, $20 billion for economic injury disaster loan, $15 billion for the shuttered live venues, theaters, museums, and zoo grants, $3.5 billion for the SBA's 7A debt relief program, and another $2 billion for certain SBA lending enhancements. I mention all these things because you'll eventually, just like all of us, will be paying for it. So at least you should know where your monies will be going. So under the Paycheck Protection Program first draw, you'll remember that closed for new loans on August 8th, 2020. And as of today, it's now open for new PPP loans for those that did not previously apply, or for those that applied and returned the funds to the SBA thinking, I don't really need it. I got it. I don't really need it. I didn't really use it. I'm going to return the funds. But circumstances now may have changed in which it puts you in a situation where you say, you know what, I could use some of those monies, and therefore I should apply now for the PPP. It expands the covered expenses to include those that I'll talk about in a minute under the PPP second draw. But I will add a word of caution here. Borrowers that had not previously applied for PPP or are applying for the new PPP cannot apply for both concurrently. At this point, any applications is you either apply for a new PPP loan or you're applying for the PPP second draw, which has certain requirements that I'll get to right now. So the second draw allows businesses that received the original PPP and, very importantly here, have used the funds. The only caveat to that is if you haven't used them 100%, by the time you get funded the PPP second draw, they must have been fully exhausted. And by positioning yourself that way, you could be eligible to receive as much as another $2 million. As I mentioned, it allows some of the allowable forgivable uses of the money, and it simplifies the forgiveness for PPP loans, $150,000 and under. Finally, it also provides greater flexibility for the covered period. And you may remember that we began the PPP with an 8-week covered period, which meant that all your monies had to be spent within those 8 weeks. Then the PPP Flexibility Act expanded that to 24 weeks, and now the PPP second draw provides you the option to say how long you want your covered period to last, whether it's 8 weeks, 10 weeks, 12 weeks, up to 24 weeks. No less than 8, no more than 24. There's two relatively simple conditions that you must meet, and one is that you were in operation as of February 15, 2020. It's a second draw loan. The first draw required that as well, so none of you should have any problems meeting that. But this one is interesting. You don't have to prove anything, but you may not apply for this if you've deemed your business permanently closed. Now, we've seen some businesses that have closed, but temporarily. But if you've decided that your business is permanently closed, you're not eligible for the second draw funding. So who is eligible? Well, the same business concerns, nonprofits, sole proprietors, independent contractors that were eligible for the original PPP obviously are eligible for PPP second draw. Unlike the first one where companies that had up to 500 employees could apply, in this case, only companies that have up to 300 employees may apply. The nuance here is that you have to demonstrate that you've had hardship. In other words, that you've suffered a 25% reduction in gross revenues between comparable quarters in 2019 and 2020. let me touch on that one for a minute. So what it serves to do is you can look at any quarter during 2020, first, second, third, or fourth. And when you compare the gross revenues in those quarters to the gross revenues in that same quarter in 2019, you at least one of those quarters had to demonstrate a reduction in gross revenues of at least 25%. This is a very important one. And I'll talk about that a little bit more, but needless to say, the importance here is that they're looking for smaller size businesses and those that truly have needed it because of the economic uncertainty. The other condition is that you have fully used the PPP loan funds, and as I said earlier, that you were in business on February 15th. There is some expanded eligibility that these doesn't really apply to most of our customers, so I'll just touch on it lightly. And it expands it to allow for certain non-for-profits, government instrumentalities, principally those that engage in destination or tourism marketing. It expands it to certain local newspapers, television, and radio stations. But again, small businesses, those with less than 300 employees. And an important part of this is that none of these businesses could engage more than 15% of their time or their expenses or revenue towards lobbying activities. Who's not eligible? Well, if you're on this call, chances are you're eligible because you have a PPP loan. There is a list of businesses that the SBA puts out that provides for ineligible businesses. Publicly traded companies are ineligible if more than 15% of your time or resources are spent on political or lobbying activities. If you're a business organized in the People's Republic of China or the administrative region of Hong Kong, if you have a board member who's a resident of China, if you're a person who had to register as a foreign agent, or this one may apply to some of you, if you received a grant under the shuttered venue provision of the Act. And at the end of this presentation, I'll touch on the shuttered venue provision, but that one deals mostly with theaters, zoo, theatrical, any kind of theatrical performances, and that industry. So what is the amount of the PPP second draw, and how do you compute that? Well, it's either the lower of $2 million or the average monthly payroll costs. And how do you compute the average monthly payroll cost is the same as you computed it for the original PPP loan that you have. But this time they are allowing you some flexibility to also use 2020 if that provides you with more availability of dollars. Usually that wouldn't be the case, and usually you'll defer to 2019, and that's going to provide you another benefit as well, which is if you're coming to the same lender that provided you the original PPP and you're going to use the same computation that you used for the original PPP, you won't need to resubmit all that documentation that you did during the first round. The other thing that they expanded, and this was principally for hotels, motels, and food service. In other words, if your NAICS code begins with a 72, they've increased from 2.5 times the average monthly payroll to 3.5 times the average monthly payroll. And the distinction here is what I want to convey, it's important that you distinguish between how you compute what your maximum loan is, and then how you apply for forgiveness, because the two, while related, are separate. You get your maximum loan by simply looking at payroll costs, right? And payroll costs is bigger than just the salaries you pay. It's also the benefits that you provide your employees, and even their share of the taxes. You may remember that from my presentations during the initial PPP. So what did they add in terms of forgivable and allowable expenses? Well, they added 4 categories. They added supplier costs, and those are goods that are essential to the borrower's operation. You know, this morning we had a client say that they were in the tchotchke, or tourism, little knickknacks that were specific.
Souvenirs, Angel,
Souvenirs, right? You know, and they said, would that be considered? And I said, yes, because you know, you entered into that contract or purchase order. As long as you did that before the PPP second draw loan is dispersed, it would be an eligible expense. And here, if it's a perishable good, it doesn't need to be tied to a contract or a purchase order. Also, covered worker protection, expenses that you entered into in order to adapt your business to compliance with Health and Human Service, the CDC, OSHA, your state or local government requirements. You know, some of these things like air filtration system, the physical barriers, you know, those sneeze guards that are everywhere now. If you had to expand your indoor, or you created outdoor operating space in order to operate safely, on-site, off-site health screening, all of those type of expenditures are now eligible expenses for your forgivable and allowable uses. Operating expenditures having to deal with business software or cloud computing that facilitates your business operation, the delivery of your product or service, the processing, payment, or tracking of payroll expenses, human resources, accounting, you know, businesses had to pivot quite a bit to adapt to this new environment where a percentage of employees are working from home, et cetera, social distancing, all of these things. And so part of those expenditures are now eligible for forgivable and allowable uses. And then finally, the last one has to do with property damage, vandalism, and looting. If you were unfortunate and experienced any of that during 2020, and they are not reimbursable through your insurance or other, then those would be covered as well. And I would say that when you look at insurance, if you filed a claim for, say, $20,000, but your deductible was $5,000, I would say that the $5,000 would be a non-covered expense, and therefore something that you can put as a forgivable expense. But let me be clear on this. Let's remember that this is the Paycheck Protection Program, and at least 60% of all forgivable expenses must be in the form of payroll expenditures. So here's a list that you might be familiar with from many of the forgiveness presentations, and this is just a summary of what are allowable expenses and what are forgivable expenses. And almost all of the allowable expenses are forgivable, except a couple that have to do with interest on debt obligations that you had entered into before February 2020. Those are not forgivable, but they are allowable. And the refinancing of any idle loans made between January 31st and April 4th, and those are allowable, but they're not forgivable. So what's new here? I talked already about the non-payroll costs, new ones, the supplier, worker operations, property damage. But under the group health benefits, I don't know that these were new as much as they were clarified, right? They did say that if you pay for group insurance, for group life, for group disability, for group vision, or for group dental, that those are both allowable and forgivable. So I mentioned the 60% must be in payroll costs, but I also want to remind you that there are limitations on owner compensation. And we went through that quite a bit during the forgiveness presentations. But in this case, it's going to be slightly different because since you're going to be able to pick either 8 weeks or anywhere in between 8 weeks to 24 weeks, there's going to have to be some prorations for owner compensation based on the same concept that was developed for the initial PPP, which was that they didn't really want this to be a windfall for business owners, but rather more directed towards employees, and therefore put some hard limitations on what an owner could compensate themselves and have that money forgiven. If you don't remember what it was, take a look at some of the prior presentations on forgiveness, or just call your first responder, and we'll send you the worksheet that showed how to determine what the maximum owner compensation is going to be. Then finally, as was the case with the first one, covered contracts must have been entered into before February 15, 2020. Now, that doesn't mean that if you renewed your lease, you pretty much stayed in the same place, same conditions, etc., but you had to enter into a renewal, that you couldn't show that your initial lease had been entered into before February 15, 2020. Anyway. Let me talk for a minute about documentation requirements for the PPP second draw. There is going to be, of course, an application available through our portal. It isn't there yet. We are simply awaiting for both the SBA and our service provider to finalize those things. We expect that to occur in the next few days, and we're certainly going to send you a quick email to make you aware that you are eligible. Well, not that you're eligible, that you can now submit your application. But if you want to see what that application looks like, you can ask us or go to the SBA website and get form 2438-SD. It's important that you see that it has the SD, which stands for second draw, because this application is different than the original PPP application. But I've seen it, I've reviewed it. It's really quite easy. So here are some of the other things that they've made it rather easy. So for payroll costs, remember that you have to provide supporting documentation for how you came up with your maximum loan amount. Well, in some cases, you all have already provided us with that information if you're going to use your 2019 average monthly payroll costs. If you did, and that's the same average monthly that you're going to use for your second draw, and you did your loan with us, then you're not going to have to resubmit all of that documentation. We'll have it on file, and therefore it'll be a lot easier for you to use it. I mentioned at the beginning of this that there is a requirement that quarter to quarter, your revenues must have declined by at least 25% in at least one quarter. Could have been the whole year, but at least one quarter. In fact, you could have been um, flat in the first quarter, declined by 30% in the second quarter, and then grew even year over year in the third and fourth quarter. You're still eligible because at least one quarter declined by 25%. Well, if your loan is under, if the loan that you're applying for is under $150,000, then you're not even going to have to provide us documentation to demonstrate the reduction in revenue at the time of application. You will, though, be required to provide us documentation when you come back to apply for forgiveness of that loan. All others, you would use annual or quarterly financials to demonstrate that reduction in revenues. And it's very important that you understand that what they're looking for is a reduction in gross revenues. This isn't about profitability. This isn't about net profit or after cost of sales. It's top line revenue. And of course, you have to demonstrate that you were in business on February 15, 2020, and typically that's done through payroll records. When you did your first PPP loan, I believe you had to demonstrate that. So this is something also that we would have in our records as well. So how do you apply? Well, you're going to apply electronically, and it's going to be through our website. And as soon as it's available, we're going to make it as easy for you as possible. Again, I'm optimistic. I think that by Thursday or Friday, it'll be ready and available. It's important to know that at the earliest, the SBA has said that no sooner than Wednesday can anyone apply for the PPP second draw. And right now, they are opening it up on Wednesday for minority-owned institutions primarily. So while we expect to have a more favorable treatment than regional and money center banks like we did with PPP, right now what you're hearing that you can apply starting Wednesday or even today, it's really for those microloan processors, the minority-owned businesses that are processing some of these smaller PPP loans. So should you apply directly or through an agent or broker? Well, there's a reason we put this in here, and it's twofold. Number one is we want to convey to you that we enjoy working directly with our clients and are here to assist them in every possible way that we can. But we always encourage you to reach out to your accountant or your lawyer for specific advice, in particular specific tax advice, and whether you qualify or not, particular to your individual business. They have the resources and the institutional knowledge of dealing with you and would be in the best position to offer professional one-on-one advice for your business in particular. This last piece has to do with the agent. Yes, you can use an agent or a broker to help you with this. Personally, I don't think it's necessary, but you may choose to. If you do, we caution that you cannot use PPP dollars to pay for that agent, and that while the act provides you with an opportunity to be able to use it, that would be the responsibility between you and the agent, and not First National Bank of South Miami. So what are a few other components of the legislation? I mentioned that the covered period, you're now going to have the option to pick anywhere between 8 and 24 weeks as your covered period, and you would do that as you're spending those monies. There's no need for you to say right up front, well, I'm going to use 12 weeks. Well, depends how efficient and effective you are in utilizing those monies. You're going to determine how much time you need to spend it all in a form that would make you eligible for 100% forgiveness, which is all of our goals. They did create a simplified forgiveness process, not blanket forgiveness. Blanket forgiveness was a concept that we thought they'd just say, well, if you owe $150,000 or less, you're forgiven, goodbye. But this is as simple as you can get. They say you have to answer 3 questions. The first one is, describe the number of employees that you were able to retain as a result of being granted a PPP loan. What was the amount of PPP funds that you spent on payroll costs, and how much was that PPP loan? So really 3 questions that go to the heart of what the Paycheck Protection Program was originally intended to do. Keep employees, keep them on the payroll, and spend most of your money on payroll costs. Then as a borrower, you're going to have to attest to 2 things. Well, you have to attest to several things, but the 2 key things are, 1, that all of the information you provided, including the information to do the required certification, was true and correct, and that you have complied with all applicable PPP requirements. In other words, you utilize the money for allowable uses and any other provisions that exist within the Act. Next is the elimination of the idle advance reduction. Some of our clients already experienced this, where they got both an idle grant and the PPP loan. And when they applied for forgiveness for the PPP loan, they applied for, let's say, $100,000 forgiveness, and we got back $90,000 towards the repayment of that debt. Well, that was the idle advance because the SBA had determined that you couldn't double dip. Well, Congress turned that on them and said, no, we fully expected that the idle advances were part of the monies that we're giving our businesses, and we don't expect you to reduce that from the forgiveness that they are otherwise entitled to. And therefore, what happened is that they're no longer eliminating that idle advance from the forgiveness monies that they return to the bank, that's the SBA, and the SBA will be paying us for those idle advances that they reduced from the forgiveness checks that were sent to us. The other has to also do with double dipping. And you'll remember that the IRS said, wait a minute, Congress said that they're not going to require that you show the forgiveness of debt as revenue. But if you choose that, well, of course you would choose that. We're not going to let you deduct those expenses from your revenues. Well, Congress turned on the Treasury there as well and said, no, we're going to allow our business owners to both deduct the expenses for tax purposes and not demonstrate forgiveness as revenue. So good news on both those fronts. So something that wasn't so great, but understandable, is that Congress did limit those borrowers that have already received forgiveness from reapplying for PPP with expanded uses. So we had a few cases like that, one or two, where the borrowers applied for forgiveness. Forgiveness was granted, but they still owed a little bit of money, and that's because they didn't spend 100% of those dollars. Well, had you not applied for forgiveness, maybe with all of these other allowable expenditures, you would have been able to allocate 100% of it. So these are things that you have to be considering for when you apply for forgiveness for the original PPP. And what the new act does do is it allows for those borrowers that either have already returned or will return all or part of their PPP dollars to reapply for up to the maximum PPP loan amount that they are otherwise qualified. But remember, if you reapply for a PPP loan, you cannot get the PPP second draw. So you're only going to get, one in those cases. Let me close with the shuttered venue operator. While I don't anticipate that there are many on this call, I do want you to at least be aware the shuttered venue operators component of this act really goes towards live venue operators, theatrical producers, performing arts organizations, museum, zoo, etc. It excludes public companies. It excludes companies that get more than 10% of their revenues from federal funds. It does require that the shuttered venue was fully operational as of February 29th, and that there was at least a 25% reduction in quarter-over-quarter revenue, and that as of the date of the grant, they must either already be open or anticipate or intend to reopen. But these grants are for as much as 45% of the gross revenue that they earned in 2019. And if the shuttered venue qualifies, they could even get a second grant of up to as much as 50% of the first grant. Now, if you do you are this type of business, you do apply for the grant, then you cannot apply for the PPP second draw, because it's one or the other, either the grant or the loan. Obviously, I think that the grant would be much more favorable to those businesses. Well, on that, I'm going to turn it back over to Veronica and entertain your questions. Thank you all so much.
Thank you so much, Angel. Terrific work as usual. We only right now have 4 questions posted in the Q&A. If you have a question, please be sure you post it in the Q&A, and we're going to get started with those right now. You can take that slide off, Angel.
All right. I thought I did.
So our first one from one of my favorite schools, it's been around a very long time. Can the comparable quarter be any set of consecutive 3 months versus January through March? Does it have to be a set quarter? So if not, can it be the first, second, third, fourth quarter of a fiscal year versus the calendar year?
So good question. I'll review it more specifically rather than jumping on an answer. What I have read thus far is a calendar quarter, and it is 1, 2, 3, or 4 of that calendar quarter. But I could see where a school would have potentially a different timing. So let me look into that and get back to you.
Okay. Clarify the use of the PPP funds is the termination of funds based on the expenses and or the actual funds. For example, the expenses incurred qualify to have the PPP forgiven, but also have put the actual PPP funds aside and still maintain them in a separate account. I don't think it matters where, if the question is, and I think this is the question, where the money is. So if you had $150,000, $200,000 of your PPP proceeds put in account X, but you've incurred the expenses and paid them in account Y. If that's your question, Anonymous, it won't matter because we're not looking to see what the balance in account X or Y. We're looking to see how you spent the money. So if that's not answering your question, then please clarify for us. Okay, I legitimately used all of my PPP loan money for payroll and rent, except for the sum of $3,000, which I kept for emergency money. Does this prohibit me from applying for the second draw money? So if they didn't use 100% of the first.
Use it. You have to. You got to use 100. You got to use every last dollar. Unfortunately, go find an expense within that covered period that you either incurred or paid, that you can say, well, these $3,000 go to that, because it'd be a real shame to lose the opportunity to not get a second draw for $3,000, right?
So look back at those qualified expenses, your rents and other ones that weren't as obvious, and apply for that forgiveness as well. Of course, a lot of you know from seeing our previous webinars on the forgiveness, we were encouraging you for amounts, especially the amounts under 250 and 150, to hold off, because we were hoping for this simplified, well, we were hoping for blanket forgiveness. As Angel says, it wasn't blanket forgiveness, but pretty close to blanket forgiveness. But we understand, I mean, there are people who really wanted to apply for the forgiveness and get it for a variety of reasons. They wanted to get it behind them. They wanted to make sure that they got the forgiveness and got the funds forgiven before the government changed their mind again. We know that the government has been fickle on a lot of things. Perhaps they were considering selling their business and that would have impacted. Perhaps they were applying for additional lending and they wanted to make sure that it didn't jeopardize. So there were, and some people just wanted the loan off their books prior to the end of the year. So there were different reasons that people applied. But Barry, I would look again, as Angel says, and see if you can find legitimate expenses for that remaining 3,000. Because Angel, the bottom line is, if you don't have 100% forgiveness of your first one, you will not be able to apply for the second draw.
If you don't have if you haven't spent 100% of the dollars, you don't have to have applied for forgiveness just yet, but you have to demonstrate and show that you've either spent or will have spent that before the second draw is funded. Now, all of these covered expenditures, as Veronica said, that were added, are eligible now, and they're eligible for the first PPP. So you might want to look and see, did I buy a bunch of PPE equipment, or did I have to configure the space, or did I pay a supplier that I can put as part of that $3,000.
Great. If one has not yet applied for forgiveness from PPP round 1 and one receives round 2 funds, will there be 2 distinct processes for applying for forgiveness, or will it be melded together? No, we want you to apply separately. To keep it cleaner. So even if you haven't applied for forgiveness yet, Brett, for number 1, you would apply for that separately. It's just cleaner. It's easier for everyone to manage, and it's a better process. So there's no reason to wait. If you've already use those funds, you can apply. Well, we don't have, if you qualify for the easy form, we don't have that available yet. As Angel said, the SBA has until the 20th of the month to have that process and application available. So now you can wait just a few more days. Can we apply for just $150,000 even though we're eligible for more based on our payroll? It sounds like someone would like the easy form of forgiveness.
Yeah, I mean, you can. There's no reason to do that because at the end of the day, while the forgiveness is easy, um, it shouldn't be that hard to apply for forgiveness, even at the 250 or 400 or $500,000 level, right? Um, you're still going to have to have the documentation. You're still going to have to retain it, and you are still potentially subject to an audit 3, even 4 years from now, right? So it's not like you can say, well, I'll take the 150 and be done with it, and I don't have to worry about it. You still got to maintain the same documentation pretty much as the others.
All righty. If you are a minority business, what do you need as proof to apply on Wednesday?
No. The minority really pertains to us, right? Those financial institutions that are processing these PPP loans.
So it'd be a minority-owned financial institution, a bank or credit union or finance company that's processing. Our bank is not minority-owned, so it's not the business itself. All righty. So does the $150,000 apply for the sum of PPP and PPP second draw? And I presume what we're talking about is the simplified forgiveness.
Yes, no, it doesn't. It's they're separate. They're separate. So in theory, the easy forgiveness could be as much as $300,000, right? For 150 for PPP and potentially 150 for PPP too.
Alrighty. So we have more. Yay! Good for you, Robert. We have more employees now than on the first PPP. Can we use these new employees to determine our new loan amount?
You can. You can pick either utilizing 2019 or utilizing 2020. But to do that, you're going to have to determine what your average monthly payroll cost was in 2020 based on all 12 months, and then provide the supporting documentation of how you computed that monthly payroll cost. So if it's meaningful and it'll mean more money for you, yeah, by all means do it. Go through the effort. If it's not going to be that meaningful, then it's not worth the effort of going through all that documentation again.
Alrighty. We have more employees. Oh, that was Bob. We got that one covered already. Is forgiveness 150,000 applied for each PPP separately or the sum of both? And Angel has answered that. It's separate. You would, okay. To clarify, it's 150,000 forgiveness. So Ricardo, I think we answered your question. If not, please repost. So if the overall yearly loss is only 18%, but one quarter was 33%, then you're qualified to apply for the second PPP loan?
Yes. Mm-hmm. Now, you said a word I didn't like, which is loss. This has nothing to do with profit and loss. If what you're saying applies to a decline in revenue, then the answer is yes.
Okay. Are the financial statements for the reduction in revenue needed to be done by an accountant?
No. They can take many different forms. It could be internally prepared financial statement. They could be bank statements. They could be your general ledger. So if you use QuickBooks or something like that, it could be, QuickBooks. They don't have to be prepared by an accountant.
I officially opened my business January 1st, 2020. Can I apply for a new PPP? Can I use it for payroll, health, utilities, mortgage, interest, rent, or forgiveness?
Yes, the answer is yes. We didn't get into the descriptors of how you determine your maximum loan amount for the businesses that didn't have 2019 in this presentation, but the act is very clear on how you would do that, and the instructions for determining your maximum loan amount would be very clear on how you use different quarters to come up with your maximum loan amount based on the fact that you weren't in business in 2019.
If you have one less employee than you did at the beginning of 2020, do you have to resubmit financials when applying for PPP in the second draw?
No.
So there's one less employee, and I guess because you had said earlier that if they had applied for PPP initially, we already had their documentation, they did not have to submit the documentation again.
So to be clear, you have to look at applying or your maximum loan amount and forgiveness as two separate events computed differently. For your maximum loan amount, it's very clear. You can use 2019 average monthly payroll times 2.5 or 2020 average monthly payroll times 2.5. That's how you got the loan amount, period, end of story. Now you go to use it, and as long as you use it for allowable, forgivable expenses, allowable and forgivable expenses, then you do your computations in order to arrive at, okay, now how much forgiveness can I apply for? And that's where that one employee less would come into play. But that should be able to be offset by other expenses that would make up for that loss in salary. So you may not have 100% of all of your expenses in payroll costs, but you might have 85, but that other 15% is for rent or utilities or any of the 4 covered expenses that I mentioned earlier.
Thank you. To clarify for next steps, we should download the 2438 SD and fill this out and have it ready for the banker. No. Anonymous, we will have on our portal, because you will be completing the application online. It's not available. When Angel said if you wanted to see the application, you can go onto the SBA website to see it. He has seen it, we have seen it, but don't fill it out manually. Don't fill it out yet. Our process is all online. It's all automated. So you will be going into the portal once it's available and completing it. So it's probably good to look at the application so you can see what information you need. So as soon as it's available. And what we will be doing for our clients, we'll be sending you an alert, an email, the email you've been getting from me. So you'll be getting an email advising you that our portal is now open and available. So as soon as we have it available from the SBA, because it's not available yet, we will send an email out and you'll be able to go online and apply.
And just to clarify, it's form 2483-SD.
Okay. A little transposition. I wanted to make sure I understood correctly. We got a PPP loan for $131,000 and we used it all. We also got 2 grants totaling $16,000. The grants don't count against the maximum forgivable amount of $150,000, and we can apply for $19,000.
Well, you can apply for forgiveness for the hundred and I think you said 138,
131,000.
131,000. Yeah.
So they got a PPP for 131 and they got 2 grants totaling 16.
Yeah, but forget the grants. The grants has nothing to do with the PPP. If your loan is for 131,000 for PPP, you're within the $150,000 threshold, and you'll be able to apply for that simplified forgiveness process.
Thank you. Once I calculate the amount needed for payroll cost, how much more can I apply for to cover the rent, utilities, and other forgivable expenses?
Again, there's just two. The maximum loan is very, very easy. It's average monthly payroll cost times 2.5. Or if you're a restaurant, or if your NAICS code begins with a 72, it's average monthly payroll cost times 3.5. There's nothing else to add in. This has nothing to, your maximum loan has nothing to do with what you can use the monies for or be forgiven for.
Any? Once, okay, if a business processed their first PPP loan with another bank and the loan is under $150,000, do we have to submit all the new documentation to First National to apply for forgiveness, or do they have to apply for forgiveness with their previous bank?
Okay, so you have to apply for forgiveness with the bank that you got the loan from. It's the only way it works. You don't have to apply for the PPP second draw with that same bank, but you can. Is that clear?
Correct. So anonymous, if you got the loan from whatever institution, that's the institution who would be processing your forgiveness application. And one of the things that we had put in our mailer and announcing the second draw program was that our clients come first at First National. So currently, we are only accepting applications from existing First National clients. And that is because there are a lot of people. We had sent that on email out, and within a couple of days, we already had more than 200 people replying saying that they were interested. So we, in our relationship with our clients and the loyalty that we earn from them and they earn from us, we are going to feverishly work to process the applications for existing clients. So I hope that answers the question. Thank you for the answer. Meredith says, I think I got it now. And she said, you guys are great. That's you, Angel. Brian,
That's everyone.
is there a reason, and Patrick for getting all the lenders to do their job too, for sure. Is there a reason you would select an 8-week covered period versus 24 weeks?
Not really. In my opinion, the longer the better, only because you can, put in more, you have more opportunity to spend more money and ensure yourself 100% forgiveness. So absent that, I don't see it.
Okay. To get the new loan, will new documents have to be submitted?
So it depends. It depends on a couple of factors. One is what's the average monthly payroll that you're going to use. If it's 2019, then that's what you use for your first PPP loan, and you're going to the same institution that already has that information, you're pretty much done, with the exception of demonstrating a 25% reduction in quarter-over-quarter revenue decline, unless it's under 150,000. And if it's under 150,000, then you are done. You just submit your application, and the rest falls into place because we already have that information.
Well, speaking of done, Angel, we are done with all 32 questions that were posed. I really appreciate your attention, ladies and gentlemen. It's 5:34, so we were able to get in almost within the hour, but a lot of really good questions. So tomorrow, this webinar will be available on our website. It will be a recorded webinar available there that you can look again because you didn't get enough today. You'll also be able to see this morning's webinar, which I think had about 52 questions, and that was almost an hour and a half. So this morning we had nearly 200 people in our webinar. So certainly you can share the webinar with others who weren't able to join, partners or business associates. And we really thank you. Patrick, thank you so much. You just had so much to say today, but we see you. We know you're there. Angel, you, as usual, are a wealth of information, and we're so fortunate to have you as our subject matter expert. So for this afternoon, Veronica Flores signing up from WF and BSM. Have a good night.